Hey Puppy Trades, I wanted to do a video analysis update on some stocks that I've covered in the past, talk about where they are now and where they're going in the future. So some of these projections I've called absolutely perfectly. Some of these I tried to pick the low and we made a new low. So that's really important to understand that there is no, magic guru. There is no, secret software. There's no proprietary algorithm that's going to call this market perfectly, okay? If you're a trader, you're a statistician. You're going based on probabilities. You're going based on all the numbers that are purely technical that you can find, okay? And the biggest and most important technical probability that you need to consider is a probability that you're going to be wrong, that I'm going to be wrong, that everyone's going to be wrong, okay? So obviously, nothing I ever say is investment advice, but what happened recently is that a lot of people have made a lot of money on a very logical statement. So what is logic? Well, logic is basically saying, hey, Tesla, Apple, Google, Advanced Micro Devices, the NASDAQ, the S&P 500, NVIDIA, Amazon, all these stocks, they all move together, right? All these stocks are big FANG, they're big tech, they're large cap stocks, and they all made this exact same high on September 2nd, okay? And then they all consolidated sideways with declining volume. And then one by one, Google broke above this high, Tesla broke above this high, Advanced Micro Devices broke above this high, SPY broke above this high. So we were saying right here with Apple at 117, based off, yeah, we had a pitchfork, we had a wave count, but the biggest thing we had was logic, right? All these other stocks have already broken above this high. Apple's going to break above this high. Lo and behold, you go on my Twitter page, it's a bunch of people who have made thousands and thousands of dollars on a very simple logical statement, right? And that logical statement was, hey, Tesla made a high, Apple made the same high, Google made the same high, Advanced Micro Devices made the same high. They've all broken above the exact same high, so Apple's going to follow them and break above this exact same high. And just that little move, Apple following Tesla above this high, made plenty of people a lot of money. And while it makes me happy, it's important to realize I'm not going to be perfect, okay? So, good for you, but you need to realize I'm not giving investment advice, and I am completely fallible, okay, just like everyone else. Another thing you need to realize is that in trading, the buyers are higher and the sellers are lower. So if we look at Apple right now, a lot of people are going to want to call the, top. We're getting to this previous high, 137. A lot of people, what they'll first do when they're beginners in trading is they're going to say, hey, this is the, major high. There's a lot of people waiting to sell Apple once it breaks above this level. No, it's the opposite, okay? There's a lot of people waiting to buy Apple once it breaks above 137, okay? The way that institutions invest is that they will have buy limit orders above these major highs. And so basically what they'll say is, I want Apple above 137. I don't want Apple below 137. So they're waiting. Plenty of people right now, plenty of buyers are waiting for Apple to break above 137. And they're going to ride it to the median of this pitchfork. They are going to ride it to the equal legs target of 150, 152, 155. Okay, so last time we talked about Apple, it was at 117 in late November. I said based off a purely logical standpoint, Tesla has already gone to this equal legs target. It's already gone to this median of this pitchfork. You can recreate these exact same points, this March low, the September high, the September low on Apple. And, Apple is going to break above this high. Apple's going to go to the median of the exact same pitchfork. Apple will reach the equal legs target. So, my target back in November was at 150, 152 would be reached in mid to late January. I'm sticking with that. I still believe that 150, 152, 155 will be reached in mid to late January. I believe that the lower bound of this pitchfork is going to be reached, and I believe that the median of this pitchfork is going to be reached. So great job to anyone who caught Apple. Congratulations. But, don't take anything I say as investment advice, because as will prove in this video, I am fallible. But first, let's look at a stock that I also called very well. Last time we talked about Peloton, we said that it made this major low and made a major high in October. And, this major low, so we took this major low, this major high, and this major low. We made a very beautiful Andrews pitchfork with reactions on the lower bound. We said that this was a completed ABC correction with declining volume, and that Peloton was going to go to the median of this pitchfork. It was going to reach the equal legs target of 169. Peloton, I think, is within spitting distance of that right now. It reached 167. So it got within $1.40 of my price target. It did it, well within my time target. It's at the median of this pitchfork. I wouldn't chase Peloton here, but I will say one major thing that we were looking. The whole reason we were talking about Peloton was for two reasons. One, it was showing up on my low implied volatility scanner that it was in the lower 3% of its implied volatility range all year. So that let us know that it was poised for a huge move. And then we used technical analysis to say that move was going to be to the upside. Another thing we were doing is looking at Peloton. We were saying, hey, this is a stay-at-home stock. Okay, it makes this exact same high in mid-October, the same way all of these, stay-at-home stocks do. And so when Peloton looked like it was going to go break above this high, we looked at two other stay-at-home stocks that made the exact same October high, Zoom and Alibaba, and we said that Zoom and Alibaba were going to break above that exact same high. So these are probably the two projections that I would say I've gotten the most wrong since I started making videos. I'm not afraid of that. So I will say with Alibaba, what we were doing when we first talked about Alibaba was we were looking at this hammer candle that formed right here, and we said if that held as a low, then we were expecting that Alibaba was going to go break above this new high. Okay, and so what happened was I bought an even number of calls. I sold at 100% to make myself risk-free, and then basically I was in Alibaba with all the risk removed from the original trade. So I was going to let the position ride regardless. The projection was invalidated if we ever closed below 152. Now, we did go below 152, but we never closed below 152. We kept forming these wicks, and I thought that these were stop raids. Unfortunately, I was incorrect that 152 or 252 was the bottom. It looks like we've gone A, B, C. I will say though, if you're a longer term investor, or for me as a longer term investor, this is very good to see for Alibaba, because that means that we are at the 61.8% retracement of this entire move from the March low. Okay, so this is our wave one, and then we have our ABC correction to the 61.8% retracement. Wave C has now reached the length of wave A, and wave C is very characteristically will have a large gap. So I do believe that we've put in a major low right here of 211. We've gone wave one, A, B, C, wave two to the 61.8% retracement. And if this low of 211 holds, then we take the length of this move and we put it at the low to get our minimum target. And it's the minimum target because wave three is 1.618 times the length of wave one. So I do expect that 211 will hold as the low, and that Alibaba is heading to 360. I believe this will happen in the first half of 2021. So in the next 4 to 6 months, I expect that Alibaba will reach 363 so long as 211 holds as low. If we close below 211, I will have to revisit this, okay? So let's look at Zoom. Zoom is very interesting because it looks kind of like Peloton, but it also looks kind of like Alibaba, where it makes this exact same October high, makes the same low, and now we have to, wonder, is it just going to go straight above this high like Peloton did, or is it going to make another low like Alibaba did? So I will say right now that if we look at Zoom, it appears to have completed an A, B, C correction from this exact same October high that Peloton and all these stay-at-home software stocks make. And now it is flirting with the 61.8% retracement. What I'll say about Zoom is that it is now closed below this low of 366, and that was my invalidation level. The reason that was my invalidation level was because that was the low for wave C. I'm not necessarily too worried. I know that this is a corrective structure from this high, but I don't want to be playing, pick the bottom too much, because what we see happen to Alibaba, we want to make sure that Zoom doesn't want to go all the way down to this gap at 324. But I think, if Zoom does have more upside, it's very little. But all in all, my projection was invalidated when we go below 366. So I would like to personally wait for Zoom to be above 366 and then continue to use 366 as, the level that I want to be long above and I think it's dangerous to play pick the bottom below 366. I do believe that we have a really nice Andrews pitchfork. You guys have probably never seen me use pitchforks this small, but we have our wave one. These pitchforks, you can reuse them. You can recycle these pitchforks. That's one cool thing about them, is once they're valid forever. We see that this pitchfork, taken from this high, this low with this high and this low, has proven to have reactions on the median. So every time we get away from this pitchfork, we go back to this pitchfork. We're right now away from this pitchfork. And I think right now that once 366 is regained, longs will expect Zoom to do exactly what Peloton did, complete an ABC correction, and then it is going to go to the equal legs target. So if Zoom closes above 366, I will be interested in it, and I will expect that it will go to this equal legs target. So this move right here is from 8.11 to 10.16. That's about 2.5 month move. So the next time Zoom closes above 366, I will revisit this chart, and I think that you will look for a major low to put in a wave C. And then with Zoom above 366, the target would be 700, 709 in the next 2 or 3 months. Okay? So bottom line, I think Zoom is going to go back to the median of this pitchfork way up here. But more importantly, I think Zoom is going to have an ABC correction with Peloton. It is going to complete this ABC correction, and it is going to do exactly what Peloton did, go to this equal legs target, place it this low. The only problem is, we don't want to be playing pick the bottom below 366. So if Zoom's back above 366, I expect it to reach 709 in the next 2 or 3 months from when it closes above 366 in the future. Okay, so TWLO, we talked about this one, made this exact same high in October, and we were talking about how this was a completed nest when it put in this low. So we take the length of this move and we place it at this low. That's going to give us our minimum wave 3 target. So this is still on track to reach 437, 440 in the next couple of months. I think by the end of March, conservatively, or and more aggressively by the end of February, we're going to see TWLO go from the length of this move, wave 1, place at this ABC low correction. So we have our wave 1, ABC, wave 2, wave 1, wave 2. So this is an Elliott wave nest. And now what we've done is we've closed above the high of 341. So we've confirmed this is a completed 1-2. We confirmed this is a completed 1-2. That makes this a nest. We have a very valid Andrews pitchfork, where every time you go to the lower bound, you go back to the median. And that's what you're going to have if you do have a wave 1, ABC correction, wave 2. You take the beginning of your wave 1 to start your pitchfork, the high of wave 1, and the low of wave 2. You're going to have a valid pitchfork where reactions will be on the median, and then you buy the dip to the lower bound, you sell at the median. If we take the length of wave 1 and we put it at the wave 2 low, that gives us a minimum wave 3 target of 437. And the reason that's the minimum target is because wave 3 is actually 1.618 times the length of wave 1. So wave 3 is actually much longer than wave 1. I am expecting that TWLO will reach 437 in late February, early October. And TWLO, when I covered it with Okta because they were very similar stay-at-home stocks. This Okta projection and TWLO projection, they both played out very well, and that's because they were both very similar wave counts. We had our wave 1, ABC wave 2, wave 1, wave 2. Okta, we had our wave 1, ABC wave 2, wave 1, wave 2. But Okta, we were also looking at it as a really nice bull flag where you have your declining volume confirming bullish consolidation, and we have our bull flag leg 1, our sideways price action with declining volume, and we take the beginning of wave 1 connected with the high of wave 1 and the low of wave 2. We had very nice reactions on the median of this pitchfork, really nice reactions on the lower bound, and now we're heading back to the median of this pitchfork. So we take the length of the first leg of the bull flag, and Elliott wave 3, you're going to call this wave 1, and place it at our wave 2 low. So I believe we went wave 1, ABC wave 2, wave 1, wave 2. So that is exactly what TWLO was. It was a nest. And then we are going to go to the bull flag equal legs target for Okta of 322. and that's the exact same time target as TWLO. I expect that Okta will reach 322 by late February, early March.